TradeFinder provides a rich, easy-to-use stock trading framework that combines advanced AI with the conservative lessons of the modern trading system. Every trader, especially those just getting started, can find the effort confusing and even frustrating. TradeFinder helps you select stocks to trade by serving up trade ideas for you to consider. Trade ideas also provide guidance on whether to trade the stock long or short. The amount of money to place on a trade comes to you from the account settings you set when you initially set up TradeFinder. With these inputs set up in your pending trade, you come to the point of deciding whether to open a trade or not. This presentation is intended to help with that final decision in any trade by providing an easy, conservative, and powerful way to evaluate both the direction of the trade and the confidence to click the Open Trade button. Selecting the stock and direction to trade. TradeFinder helps with all three parts of any trade. First, by giving you suggestions on which stock to trade, it uses AI to present you with AI-recognized trade ideas. Determining the size of the trade. TradeFinder suggests an investment size for your trade. It follows the default trade amount you set up when configuring TradeFinder. Review and execute the trade. With the stock selected, the initial direction, long or short, determined, and the number of shares set, the only thing left to do is open the trade. But how do you review a trade setup to feel confident that it will likely be profitable? That is exactly what this presentation is about. When forming a trade or evaluating the setup of one you have formed, we suggest using the tools shown on all TradeFinder charts. The tools provided are price action, directional trading volume, and value ranges of past traders. All three are shown on the chart. Using these three together will increase the likelihood that your trade will be profitable. Let's go through each of these three tools individually. How to use price action in forming a trade. Price action is shown as a candlestick plot. The bars in a candlestick plot indicate the extent of buying or selling over the time interval of your chart. The default time interval is 15 minutes. To use the candlestick plot in trade formation, we look for levels of resistance and support. To find these, look for recent periods when prices plateaued, that is, when prices flattened out for a while. Then, identify whether the plateaus are resistance levels or support levels. If they are resistance levels, the candlesticks rose to the level and then fell from it over time. Ideally, you will find more than one place in the candlestick pattern where this resistance is repeated. When you find these, you are told that traders identified these price levels as the point at which they no longer considered the stock price tradable. There is resistance at this price and above. In a similar but opposite way, find support plateaus where the price is floored. It does not fall further because traders have fought it and pushed it higher. One approach to setting up a trade. 1. Select a stock and load its chart. 2. Get a big picture look at the price action. 3. Determine whether or not to proceed. 4. Place the trading box at the entry point. 5. Determine if the direction should be flipped. 6. Zoom to a closer view. 7. Adjust the stop loss until adequate. 8. Adjust the take profit R to an adequate level. 9. Zoom out to the 2-week view to confirm guardrails. 10. Review of the dollar value of risk. 11. Review the value settings, VAH and VAL. 12. Start trade. Select a stock. Find a stock ticker you want to trade and load its chart. Does it look tradable when viewing its 2-week chart? Does it look like it has enough movement to be trending, or is it ranging? Does its current ending price action fit into a comfortable pattern? Determine to proceed or move to another stock. Place a trading box at the ending bar of the candlestick chart. Determine if the box should be flipped. Zoom in closer to see the trading box in a 3-day view. Adjust the stop-loss box until it includes the recent candlesticks for the past week or so. Use the R box at the top middle of the chart and increase it until it also includes the recent candlesticks for about a week. You do not mouse drag the take profit box because that would also change the stop-loss box value. Zoom out to a 2-week view to see how the proposed trade fits within the chart's patterns. Confirm that the candlesticks reside within the fair price area between the V, A, H, and V, A, L chart lines. They do not all have to be within the area, but their relationship to fair market value should be understood and accepted. If the modeled trade is satisfactory, click the Form Trade button. Move on to the next trade.